Welcome, everyone, to This Year in Crypto, our first weekly broadcast of 2024. And before we get into it, let's just say that 2023 was sort of the cleaning crew coming in and sweeping out the stench of 2022. We're going to start with a market recap. How'd we do last year, Carl?
Thanks for asking, Dave. Well, I think a happy birthday to Bitcoin is in order. 14 years ago on January 3rd, the Genesis block was created. And so happy birthday, Bitcoin. I mean, this is where it all started. And so that's the first order of business. Try not to fall asleep here as I recap the TradFi instruments throughout the last year. The US dollar didn't do much, ranging between 100 and 115 all year. Gold had some volatility towards the end of the year, but ended up 12.5% up. The S&P, while everyone thought it was bearish at the beginning of the year, ended up 25%, now near the all-time high. The NASDAQ, similar story, up 50%. And now let's get into the good stuff. Bitcoin up 155%, starting the year at 16.5K, sitting around 43,000 right now. Excuse me. Ethereum starting the year at 1,200, now at 2,200. Solana up an incredible 920%. You could have bought it in January this year for under $10. It's now worth 100. Okay. AVAX up 250%. These are multiples we're talking about. And Chainlink up 168%. And, Coinbase stock, obviously included in this, was being purchased for around $36 a share at the beginning of the year, now priced at around 175. So incredible year for crypto. And, I think that's what we're hoping to see for the future as well.
So the big stories of the year, and we talked about them all year long, but here we are sitting on January 5th, and the histrionics about the Bitcoin ETF are huge. But let's just recap really briefly how did we get here. So the SEC has been stonewalling Bitcoin ETFs for years and years and years, ever since the Winklevi applied for one. But in the middle of this year, Grayscale won their lawsuit against the SEC, and the judge ruled the SEC's denials were arbitrary and capricious. And that effectively put the SEC in a bind. And then BlackRock announced in the middle of the year that they were going to file for a Bitcoin ETF, followed right on their heels by Fidelity, ARK, Invesco, and a pile of others. So here we are, having gone through a saga where the SEC has essentially forced all these issuers to use something called cash creation instead of in kind. This is described in an editorial which I wrote for Bitcoin Magazine. I don't want to go through it again here. But the reality is we are dotting I's and crossing T's, and it's right down to the wire. The staff is working with the people. And yes, Lucy could still pull the football away from Charlie Brown in the firm of political, hey, we're just kidding, guys. But even if they do that, the courts will slam them down. So the whole market is waiting on it. Why does this matter? It matters because the Bitcoin spot ETF effectively will bring Bitcoin to the mainstream. It means people can have Bitcoin in their retirement accounts, in their stock market accounts, in 401ks in all likelihood, given that it's Fidelity and BlackRock. The fact is, it means that the entire pool of capital in the world is available. Does this matter on day one? No. Will it matter when we're sitting here a year from now talking about it? Abso-fucking-lutely it will. And that's what we'll talk about later. But let's get everybody's perspective. What is your perspective on the past year, Jacob? You're sitting there. You've been our resident bear. You've heard about how well the markets did. Obviously, we know that you're not really bearish. You just like to stir it up. So what do you think?
Well, I've been praying for my little 3% correction that has very rarely come. But yeah, I mean, look, this year has been amazing. And I think you put it best, sweeping out the garbage from 2022. And 2023, I think, was a building blocks year. There was a bunch of great projects that came out. One of my favorite ones is Psy, which is actually up, speaking about markets, 1,300% on the year. Take that, S&P and gold. And it's a project with twice the transactional throughput of Solana. And this is just one of many other projects that have been pushed out. So I think it's great to see the crypto community has put its head down and continued building. CoinRoutes, no different, right? We've launched a bunch of amazing new product lines, and it wasn't easy, but I think we all got through it together. And just because the price action wasn't there doesn't mean the actual building and the development of the industry wasn't. We're just seeing the price action as a lagging indicator, in my opinion.
Jacob, I couldn't agree more. I think you said it really well. I think 2022 left behind ashes when it comes to FTX, Celsius, Terra. I mean, people were in total ruins, right? And what arose was a phoenix that came in the form of participants who built, right, and stayed strong and true. And what we're seeing now is a blossoming, new, innovative digital ecosystem that is becoming mainstream. And I think it's a testament, it's a testament to all the hard work that people who have been building while everyone else was scared and confused and, wanted out when things were going bad.
I mean, look, here the advertisement for CoinRoutes is simple. I mean, we've quadrupled the number of clients we have on the system. We hit our all-time volume high in December at nearly $10 billion going through our platform. We've added multiple products from spread and pairs algorithms to options trading to DeFi, all over the course of a year when people were saying, what the hell are you doing? Why are you still in crypto? And the reality is there are a lot of projects that deserve the same sort of accolades. And we could sit here and talk about quite a few of them. But the truth is the reason people are here is to build a new financial system, full stop. And we're seeing this play out across many sectors. There are people in Congress who get it. There are those, particularly in the Senate, who not only, maybe they actually do get it and they're just afraid of it, but we're finally getting to the point where the mainstream is starting to understand that there's something here. And that's really a large part of it. I think 2024 is that bridge to the mainstream for many of these products.
I mean, just about every single payment processing application out there, Jacob, you brought this up last time, but Coinbase has now made a feature similar to Apple Cash where you can literally go on, mom, dad, grandma, people who don't even understand the tech can go in, swipe up and say, hey, $10 to Jacob in Bitcoin, right? And it's payment. You could go on Venmo, and if you have a Venmo balance, buy some Bitcoin. Or you could do it on Cash App. You can do it on, so payment providers, we're getting regulatory clarity. We're getting ETF approvals in motion. All of these things are leading to just mainstream. I mean, think about where we were 2 years ago. Everyone thought this industry was over. And here we are. Everything seems to be lining up.
I mean, one of the other stories this past year, which kind of shows me that we're not quite where we really want to be, is as the tail end of the FTX saga. Yes, we started the year, it was a disaster. In October, Sam went on trial. He was subsequently convicted. He'll be sentenced in a couple of months, and he's facing, potentially 120 years. Of course, there's a rumor that Biden's going to pardon him on his way out of the office. I certainly hope to God that is not true. But what we did hear a couple of weeks ago, which just annoyed the crap out of me, is that they're not going to prosecute for the campaign finance violation stuff. And, my cynical nature is the reason is they don't want discovery. Nobody on either side of the aisle wants to actually admit how much money they were donated from stolen funds. And I think that there's numbers that talk about it, but nobody's given any money back so far. And I think that's a real problem. And it kind of is a black eye for the industry. The truth is that we have Michael Lewis's book. There was even an article yesterday or 2 days ago saying, hey, the guy didn't do anything wrong. If you read this book, you'll see we need more people like Sam. Yeah, he made some mistakes, but all I'll say to that is a load of horse crap.
You'd expect if so much money was donated to politicians that the regulations would be a bit swifter.
You would think
in their motions, right?
You would think, but the reality is look, there's still some stench in there, but the stench is not really crypto stench. The stench is political stench.
I see.
And given what's going on with this ridiculous election between two people who most of the country don't want to be on the ballot at all, there's not a whole lot we can do. But look, 2024 is an election year. We have the economy slowing down, whether, however you want to look at it on the macro side. And, I talk about this every week on the Macro Monday show with Scott Melker. The fact is that interest rates are not going up this year. Maybe will they come down as fast as people want? I don't know. But the macro environment for a asset class that is based upon the notion of don't trust the government is probably as good as you're going to get from a narrative point of view.
So this is a question I was going to ask you, and Jacob, you feel free to chime in here too, is what does the election year mean to the industry as a whole? whether, whoever wins the election, I mean, obviously a lot of money is going to be injected into the economy because it's an election year, which in turn obviously impacts the markets positively historically. What does this mean for Bitcoin? What does it mean for crypto? What does it mean for the broader asset market classes in general?
Well, election years traditionally don't see as much volatility because money printer go burr, right? We talk about it, but the truth is the Federal Reserve does not want to be the story. There have been occasions in United States presidential history, most notably with Nixon, where arguably the Federal Reserve did act, and ever since then they don't want that to happen. So my guess is they're going to try to remain neutral. You'll see less. It's much less likely that you're going to see rate hikes. Obviously, that's already been priced in because of Powell's speech a few weeks ago. I don't know if the rate cuts will be as aggressive as the market thinks, but the reality is we're likely to have more of a benign monetary policy this year. It also means you're not going to get a lot of regulation. People don't pass laws when there's a presidential election. They just don't, because they don't want to give fodder to the other side. Who knows, right? There's a lot of things going on geopolitically as well, but my best guess is we'll have a reasonable, if not tailwinds, no headwinds for the markets.
I see.
That'd be my guess.
Just to touch on that, Carl, that's a great question. Two things I would say. One is about a rule I'll mention after this thought. The first is, like Dave said, I don't think anything massive is going to get passed. I think what we're going to see is that the people who have their hands in the pockets of these politicians will impose their will about crypto. So I think I wouldn't be surprised to see some traditional finance players who are massive political donors and are anti-Bitcoin, cough, cough, Jamie Dimon, try to pass regulations that actually hurt our industry and slow growth. So I don't think Bitcoin is, while it's a commonplace name, I don't think it's like abortion or some of these other issues that polarize people as much. I think it has more to do with the fact that these major financial institutions actually stand to lose from its adoption. So I think we see some regulation get passed there.
So that segues well into what we think of the immediate impact of the ETF is, right? How do these big banks respond? One of the most interesting things I've seen is that there's been kind of a scramble heading into the ETF approvals with, I think it was Grayscale who left out the names of their authorized participants in their S1 application. I wanted to know your opinion about why that is. Do you think there's some, it seems like it's a very hectic time for all these firms and issuers. And what do you make of all of that?
Well, look, first of all, in the Bitcoin ETF, because of the fact that it's in cash creation, the authorized participants are basically toll takers. They don't really do anything other than collect fees. The only thing they can do is buy at whatever the issuer's stated price is at that instant, a block of ETF shares for an amount of cash, or sell a block of shares for an amount of cash. That's the redemption price. That's it. There's no ability it doesn't confer any additional ability to be able to arbitrage or market make or any of that crap. As a result, JP Morgan, of course, was one of the first authorized participants. Why is that surprising? Of course it isn't. It's a toll taker. They want to take a toll on every financial transaction. Yeah. Not surprising. But what it does mean, and as I said, I wrote about this, is that the issuers themselves are going to have a much wider disparity in how they actually produce those prices and how they don't. So for those watching at home to understand the actual mechanics, what does it mean? For a Bitcoin ETF, there will be some number. Let's just say it could be arbitrary, some amount of Bitcoin for some number of shares. I generally think a lot of people are going to pick some round numbers like 100 Bitcoin for 100,000 shares. It could be 50 Bitcoin for 50,000. It could be 100 Bitcoin for 50,000. Whatever, they can pick the numbers, but let's just say 100. All that means is JP Morgan says, what's your price, BlackRock? And BlackRock says, well, it's 44.4 million if you want to buy it. Here, buy my 100,000 shares. And by the way, JP Morgan pays BlackRock a fee, and then JP Morgan marks that up and sells that block of shares to a market maker. That's all it means. And so who the people are, they're going to be big players that the SEC is comfortable with. That's all it really means.
I see.
It's not a big deal. What is a big deal is as you look at 11 different ETFs, what their spreads will be as they actually trade, meaning how much market makers feel they can trade them. Liquidity will matter. The spreads of creation and redemption prices will matter. And the performance of the funds will also be impacted by, can the fund actually buy the shares that they're creating or sell the shares that they're redeeming at the price that they quoted. And so you're going to see some interesting things that will evolve over the course of the year, but that's minutia. What really matters is the advertising. You're going to see 11 firms advertising the crap out of this product. You're going to have sales forces in the tens of thousands of people actively marketing this stuff. That's why I say the narrative matters more. And that doesn't start like that. That's not like a sprint. That's a marathon.
Are we expecting another Super Bowl commercial?
Probably. I
with,
hope not, because
with Matt Damon and Larry from FTX.
Yeah, I mean,
what do you think about all that?
I don't know, Jacob. What do you think? You think they're going to go to the well again? I think it's possible.
Well, I mean, if FTX did leave us with one positive thing, it was a great Super Bowl commercial. So I will hand them that.
Yeah, that's true. It was awfully funny. I got 10 forks right here, baby.
How about Coinbase? Did you guys see Coinbase's new commercial or advertisement? That had to be emotional, about how boomers can now take control of their lives and talking about the tokenization of your data and being able to monetize yourself. I mean, that really hit me differently, you know?
Well, speaking of someone who turned 62, believe it or not.
Maybe you don't. Yeah, Jacob, you agree with me, man.
The thing is, I actually do agree with you. I mean, the funny thing is most of the people my age look at me like I have two heads when I start talking about this stuff. But the fact is, everything, and I mean literally everything, whether it's stocks, bonds, doesn't matter. It will all be tokenized at some point. Now, why does this matter? Why do I say this with such violence sometimes? It's because securities could be tokenized and non-securities could be tokenized. And so, yeah, we need a financial system that stops making artificial distinctions. I don't think this is the year that happens. I am hopeful the following years when that starts to happen.
So a law that, sorry to interrupt, Carl, a law that just got passed that I think is important to mention, and I obviously want your guys' opinion, is the IRS just passed a law signed by President Biden reporting that any digital asset transaction over $10,000 needs to be reported. Now, within this law is written that you have to report the sender's name, address, and social security number. So immediately right off the bat, if you know how crypto works, that may make sense for a Coinbase transaction where you know it's a registered company, or a peer-to-peer where you know the other sender. But that's a very small piece of the pie. What about all the transactions on chain with these decentralized exchanges? Or what about the miners who are receiving Bitcoin in sums over $10,000? And I think this just speaks to the fact that the US government has no idea what they're even passing laws about. They haven't taken the time to understand, or maybe they don't care to. But I'd like to hear what impact you guys think this has and how the US crypto market is going to react to it.
You want to start?
I was gonna say, isn't that already a law with cash? If you send someone $10,000, you gotta report it, right? And so for businesses, I'm sure it just works out like that. You put it on your books the way you would any transaction. If anything, I think that this means it's becoming more in line with what real cash is doing in the U.S. right now. I mean, I don't know, Dave. Do you have a different opinion?
Well, I do, but my different opinion is that that's the intent, and it sounds good on its surface. And since everyone in Congress lives on the surface and doesn't dive into it, that's how this kind of crap gets done. So if you think about it this way, so we're a company, and people can pay us in crypto. They can pay us in wires. If it's a wire, it goes into our books. If it's crypto, it goes into our books. We account for it the same. The difference is if someone sends it to us in crypto, now we have to find a form. We don't know what the form is. We've asked our accountants. Mm-hmm. And we have to report, and it could be a foreign company, so it might not have a social security number. We don't know what to report. But in our case, it's pretty benign, right? We're providing a service. People are paying us for it. We account for it. We pay taxes for it. It's all good. Now imagine you're an individual. And let's say you are trading and or you agree to sell something in Bitcoin. Well, I mean, if you do it via bank wire, you don't have to think about it. If it's cash, you have to report it. If it's Bitcoin, now you have to report it. Is it a big deal? Well, I don't know. Distributed, decentralized exchanges, are they legal in the US? Good question. It's in that quasi law. There's nobody has been busted for using them, but certainly there is a quasi law.
Yeah.
There's no way you could report it. Or let's say you swap from Ether to Bitcoin and then back again. Is each one of those, are you being paid? Is it a swap? Is it barter? Is it cash? What is it? I don't think there's any clarity. I agree with you, Jacob. They really didn't think it through.
It just seems like they're pulling the trigger fast on anything that hinders the growth instead of taking a proactive approach and saying, look, this thing is here to stay. I mean, you have Jim Cramer tanking the market 10% after he said you can't kill it.
Well,
But
I mean, that deserves special mention. So one of the funniest stories of the year was Jim Cramer literally almost calling the bottom by saying, you should sell Bitcoin, you shouldn't own it, whatever. We went on this huge rally. And then right at the top, I mean, within $100 of the top, he comes out and says you can't kill it. And boom, within 2 days, it's down, 10, 12%. I mean, you can't make this crap up. Now, the fact is, a blind squirrel can find a few nuts. It doesn't mean that Bitcoin is dead because Jim Cramer did this.
Such consistency, Dave. It's not just a one-off. He might be the worst trader alive.
It's funny. I remember back in the days when he was actually a really good trader, but right now he is almost mimicking the greed and fear cycle. And so, yeah, it's just a funny story from the year. Like, none of us really care about this. What do we really care about? What we really care about are the major themes. So, I think that it's important to understand what's going on in the world. We have had alt season. We have had in the last month, we've had multiple coins with major moves up and down. We've had multiple new projects. We've had the Bitcoin ETF going. We've had the Bitcoin ETH ratio going, basically moving more than 10% up and down over the last month. And that's between two big assets. There's just a lot of motion in the market because there's a lot of excitement in the market, right?
Yeah, absolutely.
So, I think the most important thing is so what do we think people should be focusing on for the next year? What are our year predictions, both in price space as well as policy space, as well as what you think is most likely to look at? And why don't we start with you, Jacob?
Yeah, look, I mean, throughout all of our episodes, we've covered why the narrative looks great, and especially going into 2024, I think it looks strong as ever. And it pains me to say that, as I am the resident bear. But for this year, what I would say, the advice I always give to people who ask me, what cryptos do I buy to get rich? It's such a terrible, generic question. And what I always say is, look, this industry is here to stay. The best thing you can do as a personal investor, this is not financial advice, do your own research, is to research a project, find something you believe in long term, and DCA into it. Unless you're a professional trader and know how to use leverage, that's obviously a different conversation. But something I was reading on Twitter that I wanted to bring up that's relevant to your question is that the original people who were buying Bitcoin, no one had the balls to hold it from $1 to 60,000 unless you believed in that narrative. So I think buying into the narrative becomes the important part, not trying to play the up and downs, especially if you're not a trader.
That's exactly right. It doesn't matter if you're buying it at 40,000 or 35,000, right? You might never get the opportunity to buy it at 30,000 again. So why not just buy it if you're planning, if your projections are at 500, right? Jacob, I think something similar to you. I mean, I just look historically what's happened with previous runs and how they've intertwined with the halving events. And what I've seen is how the time at which it aligns with the halving is often right on cue. But what you saw in the 15 run, that run up lasted a few hours. The one in 2017 and 18 lasted less than a day. The one in 2021 and 22 was extended over the course of a month or two, right? It had two different pushes up. I'd say we see something similar here where it's going to be a much more extended out bull run. It's going to be a much slower grind higher with washouts imminent along the way. I mean, I think that, like Jacob says, once my Uber driver asked me what coin he should buy, I think we might be a bit early. The fact that the stars are aligning too well has me cautious, if anything, which makes me think, the ETF at first might be a sell the news event, and at second, might obviously inject a shitload of money into the market, but a slow grind higher, and eventually, obviously, the price targets we all hope for, which are.
Look, at the end of the day, when we talk about what the ETF means, what the narrative means, Bitcoin's critical mass, if you get to adoption as digital gold, just looking at the market caps, that would indicate Bitcoin at a price of $500,000 or more, full stop. And that understanding is where gold is today, which is less than 10% of monetary aggregates. I don't think Bitcoin gets to 500,000 in this cycle, although it's certainly a possibility. What's much more likely is people start wondering. And there's an expression people use in crypto, slowly then suddenly. We don't know when that suddenly is going to be. My guess is it's the next cycle, as it were. But the truth is that the odds of it happening are much, much larger. And so you're seeing institutional money, and people could look at this data as it's all on chain. The size and strength of the Bitcoin network, its hash rate, is triple where it was when it was at the all-time high of 67,000. Right. That indicates that even the same sort of euphoria we had back in 21 would indicate a price of 180. So I don't know where it goes this cycle. I don't know if we get to critical mass. What I do know is a narrative change is upon us. And maybe as we look into 2024, this won't be the year. There could be a macro event. There could be a black swan event. Elizabeth Warren could win and shut things down in the U.S. for it then to go, we move overseas. Lots of things could happen. But when I look at it, my base case is Bitcoin rallies strongly over the year with volatility because of these sorts of flush outs that we've seen, and we just saw one this past week.
Yeah, just to tag on that, and like I was saying, I mean, once you see institutional flow roll into this, the price action of Bitcoin starts to trade like a traditional asset, like a gold. It's much more technical at that point, right? The only difference being you've got average Joes posted up in Italy who can get 200x leverage and can get washed out in the blink of an eye, right? And so I think you're exactly right. What's interesting is how quickly every single flush out has been bounced back to somewhat of a range, and how we are slowly grinding. And like you said, it's going to happen slowly, then all at once.
I mean, the one set of facts that's interesting for our audience is if you look at ETFs. So ETFs constitute somewhere between, depending on the ETF, 4 and 12% of the market cap of the equity of the underlying equities that it represents. Now think about that. Right now, we know that somewhere in the neighborhood of 10 to 15% of Bitcoin's entire market cap is available for trading. That's not being hodled. That's not been in the wallets, etc. If you think about that, if ETFs got to that sort of stasis, you literally don't have any free float left, or almost none. So obviously things don't work like that. It works in slow grinding ways, and things change. But the price action could be rather large. But the other really interesting stat about ETFs are that ETFs make up somewhere around 28% of all volume traded in the United States, and a little bit less than that in foreign countries. In other words, it becomes the dominant trading vehicle for people to express overall market. So when you look at institutional ownership of equities is in the 70-80% range. Institutional ownership of Bitcoin now at best is 10 or 15% at best. So at some point the asset will change, and that change, if you just go back to first year economics, the curve is going to look like, what price does that have to be? I mean, honestly, it really is critical mass adoption. It's a much higher price point for it to get there. I think we're a long way from that.
What year, if you had to guess, if you had a gun to your head right now?
I think we hit digital gold in 2028.
Let's see. I have a quick question for you, Dave. What do you anticipate happening right when the ETF is approved? We talked about it a bit off stream. You said it's going to be
54.
Sort of a shit show. Not price, but I'm saying it's obviously very new, right? How this is all going to work, and the issuers and the APs, and the fact that it's not going to be in kind. How does the market spread when we look at the spreads on exchanges, and we look at how centralized exchanges that have been around for a while, Binance and Bybit, how does the parity match up? Talk to me about what you think about all that.
Well, the short answer and the snarky answer is people who have CoinRoutes will be able to make a lot of money. because there will be arbitrage spreads that will open up all over the place between perps and spot and ETFs and futures, and if you and if you could trade all of them, you'll be able to make money. That's the short, snarky answer.
If there's only a place where you could do all of that in one spot.
Yeah, really. I feel like, an old Honeymooners episode for those who ever looked around. But can it core a apple? And if anyone who's old enough to remember that, I pity you, because you're older than me probably. In any case, look, at the end of the day, I think that technically it looks like that you'll get a run up to somewhere around 54,000, which is a lot of volatility. It will retrace a lot of that because the odds of the actual inflows being as large up front as some people believe, it's just very low. But there's still, Bitwise did a study, and of RIAs and people who are on the traditional side, less than half believe it's going to actually be approved. And so it's not priced in. But the money that's going to go into it immediately is going to be the same speculative FOMOing kind of YOLO people. Oh, we got to get in, right? It's not going to be people who are on the traditional financial that's going to drive it. And so it will retrace. And then you'll see. We'll find out. Is months and
how
months
dramatic that retrace is will give us a much better idea.
Right. And so, you just have to be nimble. I can't answer the question because if they approve it tonight after the close, I think Monday we'll see a 50 some odd print. If they approve it on Monday before the open or Monday after the close, and it depends on what the action is. But with this price action, I still see a bit of a coiled spring, but who knows if it's going to stay there? I mean, we just don't know. And so making predictions of what happens without knowing what's happened immediately before it is problematic.
Interesting.
And by the way, if they pull the rug and Gensler and he has the other two Democrats say no after all the work the staff has done, there'll be 10 or 11 lawsuits filed, and it'll be a big political firestorm. But the market will sell off. We'll probably go back down into the 30s until people start saying, "Well, wait a minute, they're going to lose," and this is a long-term narrative anyway. And then we'll get another grinding rally higher, and then they'll lose in court, and who knows, whether the election will have happened by then or not. So. In fact, it probably would influence the election. In all likelihood, that might be enough of an issue to get people really annoyed. And so who knows what's going to happen? I don't.
I've heard some opinions that the ETF approval, whether it's approved or denied, is actually already priced in.
Bullshit.
And why not?
Because literally on Sunday night, Reuters came out with a story saying approval was imminent, and it went from 42 to 45 in a blink.
Move.
Didn't retrace it at all. It stayed there for a day and a half until the block reported that Matrix Report article, which said it's not going to get approved, in which case it dumped almost immediately and flushed all the leverage out. And now it's sitting 50%, more than 50% of the way from where it was before the Reuters story to the Reuters story. So, there's clearly a lot of people that don't believe it's going to get approved, or they think that it's going to get delayed, or there's risk. Plus, the other thing that you have to keep in mind is that no one in traditional finance will put a penny into something until they actually could put money into it. Mm-hmm. So it's not the approval that's going to get that money. It's the actual trading. Yeah. And it hasn't started yet.
How far after the approval happens do people get actually access to trading the instrument?
Days, probably. I think that's generally the thought. I mean, think of it this way. There's a when issued market on a lot of tokens that we've seen, and when issued market on a lot of stocks that we've seen. It is still, even with when issued markets, the first day that it trades still generally gets a pop, no matter what.
I see.
And in this particular case, that when issued market is really small because people in the traditional financial world literally can't. Remember, the reason for cash creation is because brokers can't trade spot Bitcoin. That's not really well understood or appreciated, but it's true. And so a lot of people who can't trade it become able to trade it. It's not a question of they could trade it ahead. You can't front run that because we don't know when it's going to get there. Yeah, sure. There are people who have been holding on to Grayscale. They're going to sell their ETFs when they get it. There will be some selling pressure from the Grayscale horde.
Right. But
that's going to be met by all of the institutionals' money that's been lined up by BlackRock, Invesco, Fidelity, etc. And so we'll see.
I mean, you could still get action and exposure to Bitcoin not by touching Bitcoin through things like Coinbase stock and grayscale stock and
or
whatnot.
MicroStrategies or Riot Blockchain or others. I mean,
Right.
you know, look, if you looked at my 401k, you would think I'm a real degen, but you know, hey, it is like that.
You're the oldest degen I know.
Yeah, well, you know, yeah, we're sitting here at our CoinRoutes poker table.
I'm about to go heads up with Dave after this.
So anyway, I think it's time for predictions. So what do you think next week and next year, Jacob?
Next week, I think we take out, there's a pretty clear high that a lot of people on Twitter have been noting, and I also think it's relevant, and it's right around the 48K region. So I think ETF gets approved. We rip through that. How far we rip through that, not completely sure. Could be a couple $100, could be a couple thousand. But I think we wash that out, and then, like you said, we'll get some selling pressure. I really like what you said. I hadn't thought about it in that manner, but yeah, it is the people FOMOing into the ETF. They're going to rip it up. And then obviously smart retail investors, smart money. There's going to be some type of mean reversion, algorithms included in that. And then within the following year, look, I think been working at CoinRoutes for multiple years now. This is by far and away the most hopeful I've been, not only for our company, but for the industry. I'm expecting at least all-time highs and more focused personally on altcoins, as I think there's more opportunity. And I think there's a lot of projects out there that offer well over 10Xs.
Okay, so what's your prediction for dog with hat?
Harry Potter, Obama Sonic, Inu. That was my favorite meme coin of this year.
Okay, Carl?
That has the biggest percent of my portfolio, actually, Jacob.
Yeah.
Try not to dodge it so hard. No, I think just like any other news event, I mean, you see it in Forex every time something happens, like the NIP or whatever it is, you get like a heartbeat looking candle, or it wicks out one way and goes the other. I think we're going to see something similar to that. I think if it gets approved, we are going to see that it's going to get wicked up around 48K and then right back down. Long-term bullish, obviously. Jacob, you said it best. Diminishing returns on Bitcoin mean altcoins are where the most opportunity is, and you know that's where my focus is.
So I'm a bit different than that. I think that, well, on the short term, I think I'm in the same boat. I think that a wick up on the approval, and when people can start dumping their grayscale shares and it doesn't quite get as much interest in the first week or two, I think maybe we get a little bit of squishy sell-off of 50 or 60% retracement of whatever the wick up is likely. I think 54 is the tag that I think is the technical level for that, based on some of my favorite chart guys out there.
Sure.
I don't know what the number is. The number might be way lower than that. Hell, you know, it could, who knows? But the truth is I think that by the end of the year, I will be really surprised if at some point this year we don't touch 120 on Bitcoin.
Wow.
I really would be surprised. My stretch goal will be 180.
Put some money on that.
Well, I mean, I already have a lot of money, so we'll see whether we want, you know, how we want to deal with in terms of whatever. But that my yearly prediction is much more bullish. I don't think it'll be a straight line. But where I disagree or worry is I think that the anti-crypto army is gearing up for military strategy 101 from the medieval times. Anyone who's ever looked at the way castles are built in the medieval times, there's outer defenses and there's inner defenses. I think that they're going to give up on Bitcoin on the outer defenses and go hard after altcoins for the inner defenses. I think Bitcoin is something that they're comfortable with. They understand it's traceable, but I think that they're going to go after privacy coins. They're going to go after, say, meme coins or securities. They're going to go after projects. And I think that we're going to get some black or grayish swans that creates more Bitcoin dominance. I am not a Bitcoin maxi. I actually don't think what I'm saying is good for the world. I think it's terrible for the world. But I don't think that the anti-crypto army goes down easily. And I think we are going to see some interesting things going on. So it wouldn't surprise me to see altcoins in the sense of projects that are really, really powerful. I mean, personal, you know, everyone knows, but I haven't traded it. We talked about Solana a few weeks ago. I'm not selling a Solana. I have, you know, whatever I have. I bought some, and then I bought a little bit more when it dropped to make my average cost in the 70s. I fully expect it to rally from here, but if it doesn't, it wouldn't surprise me. I think it's more of a long-term bet on the project, and the fact that anything that could survive what it survived is probably going to be a survivor. But I do think that the anti-crypto army doesn't go down without a whimper. So it wouldn't surprise me to see even more volatility outside of Bitcoin. And frankly, maybe this will be the year that we'll figure out, is Ether a security or not? Because there's all sorts of crap going on there.
My closing thoughts are 2023 was a foundational year for the emergence of a digital and modern economy. And I think that people have been building like CoinRoutes and like other projects out there. And I'm excited for what the future holds. And I think we all agree there.
Any closing words, Jacob?
You guys put it best. Looking forward to the new year, and we'll be with you guys along the ride. Thank you guys for tuning in, and we'll catch you guys next week.
Find out more on CoinRoutes.com.
And remember to hit, what do they say? What do you kids, the cool
like,
kids
comments,
say?
and subscribe.
Smash the like button and comment.
Yeah. There you
Take
go.
care, everyone.
Bye.
Bye.